A very warm welcome to the Q2 and H1 FY21 earnings call of Lumax Industries Limited. Along with me on this call, I have Mr. Anmol Jain, Joint Managing Director, Mr. Vineet Thani, CEO, Senior Executive Director, Mr. Sanjay Mehta, Group CFO, along with the finance team as Mr. Shruti Kant and Mr. Ankit Chakral, and Ms. Priyanka Sharma, Head Corporate Communications, along with SGA, a financial investor relations advisor. The results and investor presentation are uploaded on the stock exchange and company websites, and I hope everybody has had a chance to look at it. Before we start with discussions on the financial performance of the company, I would like to share key highlights of the automobile industry. As the markets are opening up, people have started adapting to the new normal. With each passing month, auto sector is showing signs of recovery. Auto sale numbers have shown encouraging recovery month over month. Entire industry was staring at supply chain disruptions during the previous quarter. However, I'm grateful to all our channel partners that we have overcome that phase and our business is running smooth now. We have seen better than expected recovery in past few months, and the credit goes to our supply chain partners as well as our customers whose operations are normalized now. As you all know, the festive season is always important to us since it gives us an enormous opportunity to book highest number of orders for the year. This year, it was even more important as economic activities of the entire nation had taken a pause in the previous quarter due to the pandemic, and this festive season is the ray of hope for all businesses to the path of recovery. We have seen almost all the automakers report growth sequentially as well as year-on-year basis with fair levels of discounts on their products, leading to low inventory level currently. There are several product launches which had taken a backseat due to COVID, but they are also in the market now, and we are happy to see them getting a good response. I would like to give you a brief overview of our business at Lumax Industries. Our company is engaged in production and delivery of automotive lighting solutions to two-wheeler, passenger vehicle, farm equipment space, and commercial vehicle segment. We are the preferred suppliers to OEMs in India and continue to be the market leaders. Feature that differentiate us from our peers is our strong branding and strategic partnership to capture the market share at the right time. We utilize our existing infrastructure to assemble and deliver a final product quickly and efficiently to meet the customer specification needs. The gradual recovery in the revenue started in the current quarter with each passing month, and we are happy to share that revenue in September month standalone was considerably higher from the same last year, and that upward trend has continued in October month also and expected to continue post the festive season. In Q2 FY21, the following new models have been launched, which consist of Lumax lighting. In the passenger vehicle segment, Mahindra has launched new Thar, which consists of all lighting as well as Bolero headlamp. In the two-wheeler segment, the Suzuki motorcycle Access 125 has the company's front combination lamp, and HMSI's Harness CB350 has an LED headlamp. In the commercial vehicle space, the Piaggio 8 has the company's headlamp and front direction indicator, and in the farm equipment space, we have Sonalika International with RX facelift and ITL, which has headlamp and fender lamps and projector headlamps with full LED fender lamps. The company was also awarded at the Chinchwad plant was adjusted as first in top 3 categories of the ACMA QCC virtual competition of Western region held in August 2020, and the Bangalore plant was adjudged third at the 15th National Quality Circle competition organized by ACMA held again in August 2020. Now, I would like to hand over the line to Mr. Sanjay Mehta, Group CFO, to update you on the financial performance of the company.
Good morning, everyone. Let me update on operational and financial performance of the company for H1. Operational performance, the share of LED lighting stands at 35% of total revenue, and that of conventional lighting stands at 65% during H1 FY21. The product mix to the percentage of total sales, 67% consists of front lighting, 24% rear lighting, and 9% others. With respect to segment mix, 61% of total revenue consists of passenger vehicles, 33% for two-wheelers, and 6% commercial vehicles. With respect to financial performance, the revenue stood at rupees 397 crore for Q2 FY21 as against rupees 429 crores in Q2 last year, down by 7%. The shortfall mainly on account of lower revenues in July month, which was practically the first month post-lockdown. There was considerable increase in August and September month's revenue, put together from previous year, resulting in shortfall of only 7% for the full quarter of Q2. Excluding mall sales, the revenue for Q2 stood at rupees 376 crores as compared to 386 crores in Q2 last year, down by 3%. The company reported consolidated EBITDA of rupees 41 crores in Q2 against the 44 crores in Q2 last year, down by 6%. EBITDA margin stood at 10.4% as against 10.2% last year due to various cost down initiatives and better productivity and utilization. Profit after tax and share of associates stood at rupees 7 crores as against 20 crores in FY20 quarter 2, down by 64%. The lower PAT is mainly on account of less profitability in associate company SL Lumax due to one-time price reduction from the customer to SL Lumax. The capex incurred during the H1 is rupees 21 crores. That is all from my side. We will now open the call for questions.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Anyone who would like to ask a question, please press star and 1 at this time. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Ashutosh Tiwari from Equirus Securities. Please go ahead.
Yeah, hi. So if I look at the Q2 numbers, when our sales is down, say, around 3% if you remove the mold sales, versus that our largest customer, Maruti, has seen good volume growth in the quarter. So is the product mix the reason why, despite Maruti growing, our revenue Maruti has not grown and other customers as well? You can highlight what is happening over there.
Can you please repeat the question? I couldn't understand your last part of the question. Was not clear, your line.
So I'm asking that
sorry to interrupt you, Ashutosh. Ashutosh, can you please speak on the handset mode? I think you're on speaker. That's why the audio is not very clear.
Yeah. Is it better now?
Yes, thank you.
Yeah. So I'm asking that if I look at our sales, X of mold sales, it is down 3% YOY. And even the revenue with Maruti is down versus last year. Versus that Maruti volumes have grown quite well versus last year in the last quarter. So what exactly happened over there? Is this because of model mix, or we lost some model which is doing well? And also in case of other OEM, basically, I think in other category I see a decline YOY. So if you can throw some light over there, what is happening?
Yeah, so this is Anmol Jain. I'll just take that question. I think if you look at Maruti along with the SMG numbers for Q2 in the current year versus the last year, their growth has been 5% in the quarter. And our specific revenue for Maruti and SMG has gone down by approximately 5% on a year-on-year basis. The reason for that is purely because their Swift and Dzire platforms, for which Lumax has a very high presence, has not done that significantly as compared to their other models. And also Baleno and Brezza, which have done slightly better, in which Lumax does not have a strong presence. So answering your question, is mainly because of the model mix, which has led to this. But if you look at overall, Maruti Suzuki as a customer still contributes the same amount as the overall pie of Lumax as compared to last year, Q2.
Yeah, that's fine. Okay, so your model mix is the main reason why there is a bit of underperformance versus Maruti numbers. Okay. And also in this others segment, if I look at, which is there also I see a decline. So which major OEM has seen a decline over there?
There would be no one significant OEM. There would be more than 15 to 17 OEMs in that space, which is clubbed into others. But again, it is pretty much, if you look at the pie as a percentage, it remains pretty much intact at about close to 16 to 17% of the total revenue pie comes from other customers.
Okay. So are you now going ahead, are you seeing in terms of schedules and all, are you seeing a pickup in Desire and Swift as well, or it is still lagging behind other models?
No, now we are seeing a very strong demand across the models. Starting from October, we expect that the H2 would be a very strong recovery, not just for any particular segment, but across segments and also across OEMs.
Okay. And lastly, on the gross margin, I see a decline versus last year, same quarter. So, any reason behind that? Because if I look at commodity prices, which you use plastics and all, there the pricing would have come down only. So, any reason behind that? Because that has impacted our margins as well.
So, on the gross margins, there have been certain escalations and there are certain price corrections, but for which we have already filed claims to the OEMs, and we do expect that in the subsequent quarters to get some of this recoveries back from the OEMs.
Okay. Thanks a lot. I'll join back with you.
Thank you.
Thank you. The next question is from the line of Vimal Gohil from Union Mutual Fund. Please go ahead.
Yes, sir. Thank you for the opportunity. Sir, my question is around, firstly, I'll just take the bookkeeping question. You said that you did a 21 crore capex in H1. What is the full year guidance?
It is 50 crore.
50 crore.
Yeah.
Okay. The second question is actually related to the one Ashutosh asked. You said that there has been some change in the model mix in some of your key customers. Overall, if I were to ask you, what has been the trajectory of your market share in the LED segment over the last maybe 2-3 years up to the last quarter? Has it gone up? Has it remained flat? Or maybe the company has a scope to recoup some of its market share? Because there have been quite a lot of players who have entered this LED segment. You may talk about Minda or maybe Motherson being aggressive. So how do you see how have you seen your market share pan out in the last 2-3 years, and how do you see it going forward?
So Lumax industry, especially in the lighting segment, has the highest market share. And obviously, you are right that there have been new entrants in the market over the last 3 to 5 years. And obviously, as of now, our market share is stable. It's not just about LED, but I'm talking about the total market, because we actually, for Hyundai and Kia, basically do it with our associate companies, SL Lumax. And for the other segments and players, Lumax Industries cater to. So be it Maruti Suzuki, which is one of the largest, or in basically the two-wheeler space. Going forward, we basically are expecting that we would actually be front-ending and doing more market aggression in the commercial vehicle space, as well as in the farm equipment space, where Lumax had significantly lower presence, and that was primarily because of conventional lamps, which were being used in this. However, going forward, since the technologies have already been changed and adopted, and as I said, like there were some new product launches, you saw the launch which we actually got from the Sonalika tractors and the ITL. So this we'll keep on doing and hopefully be able to sustain the market leadership position and also grow in the segment, specifically on the commercial, as well as in the space where it is farm equipment. The share of LED lighting parts today is around about 35% of the total revenue. Conventional would be about 65%. And going forward, we expect basically LED to conventional go to the ratio of 50-50 because our new project development is majority having some component of LED.
Just to supplement that, this is Anmol Jain again. If you look at a 2 to 3 year horizon from FY18, let's say, to the current day, the share of LED has actually increased from 25% to 35%, as Deepak had mentioned. And more specifically, if you see the two-wheeler, the LED presence has gone up from 20% to almost 40% in the two-wheeler space. So we see a stronger penetration of LED in the two-wheeler space. And since Lumax, compared to some of the competition, is a much stronger player in two-wheeler space as well, you see our market leadership sustain and with this technological shift of LEDs as well.
Right. Okay. Sir, one question on your balance sheet. What I really observe over here is on the borrowings. If you see under your current liability section, your borrowings have gone up from 265 crores to 310 crores, despite the capex, coming down. So where do you see this borrowing number ending for FY21? Do you see some repayment happening? Because what I believe is post our Bawal facility commissioning, you don't have a lot of capex that's coming up. So what is the outlook on your debt?
Ajay, would you please take that?
Yeah. So the increase in the debt is largely on account of working capital limits because of the market conditions. Because suddenly there is a ramp up. If you see the other side, the creditors are down by almost 30 crores, and there is a slight increase in debtors in the stock. So the answer to your question, way forward, that is not going to increase, that is going to be decrease, and our long term has already been reduced by almost around 12 to 13 crores.
Right.
So these are all temporary to manage the present situation of the increased demand, etc.
Right. So what I observe is your working capital was slightly negative in F20, which has turned positive right now in F21.
Yes.
What you're saying is that additional delta of about 50 odd crores is the only reason why your short-term debt has gone up.
Yes.
And that working capital is expected to normalize as and when the situation normalizes.
Yes.
Fair enough.
It has already started to normalize. You will see it in the subsequent quarters as the volume of takes again happen.
Right. March 21 balance sheet in terms of debt. Would that be a right assumption?
Yes.
Fair enough, sir. Thank you very much, sir. And one last question from my end. This is on margins. So as and when we commission our Bawal facility, and that is probably one of the that is a state-of-the-art facility that you spoke about in terms of, and which will help you localize, even bring localization, faster and take it to a higher level. So you already achieved that 10% EBITDA margin that you spoke about. As far as F22 and fiscal 23 is concerned, the volume growth is going to be much better, hopefully. And given the fact that you've done a lot of cost optimization, your localization is going to be higher. What are your next targets on EBITDA margin going forward? Because you really achieve what you committed in terms of EBITDA of getting it to 10%. What are your next targets on that?
So I'll answer that. This is Anmol Jain again. So if you look at the last, let's say, 3, 4, 5 years, our EBITDA margins have gradually continued to increase from a 7-8% level to what it is today at about over 10%. And that has largely been on account of multiple things, including the insourcing of the SMT PCB process. Going forward, I think it is our continuous endeavor to increase our EBITDA margins. But to give you a picture, I think over the next few years, our endeavor would be to try and get closer to the teen margin, somewhere 12-13% would be probably my best estimate in terms of the target of the company's operating margins over the next.
Thank you. I would request Mr. Gohil to rejoin the queue for follow-up questions. We would also request participants to please submit your question to 2 at a time. Should you have a follow-up question, please rejoin the queue. Thank you. The next question is from the line of Aditya Makharia from HDFC. Please go ahead.
Yes, sir. Just 2 questions. Are you concerned about demand coming off post the festive season? Because a lot of two-wheeler makers such as Bajaj have said that there is some weakness in the festive demand. And second is, could you share some more details or give some commentary about your foray into electronics with Stanley? So how is that faring? And you had mentioned something about HVAC related components. So maybe you could give some qualitative comments there. Thank you.
Sure. So I think let's talk about first the market scenario post the festive season, or let me put it very in a short-term basis on the Q4 of this financial year. We are basically optimistic, but cautiously optimistic. However, I think the way we are getting the scheduled orders from our key customers and market leaders, specifically in the passenger car segments as well as in the two-wheeler segment, we see that this run will actually sustain going forward in Q4. One of the primary reasons is that as the country is going under unlockdown stages and the rural as well as both urban are opening up, including major cities, we are seeing that there is consumer confidence which is coming back. The businesses are getting normalized, and hence the cash flow positioning is also basically getting better, leaving at the end consumer more disposable income. Hence, we feel that this will be sustainable. However, given the COVID times and unprecedented pandemic situation, we remain cautious of any, I would say, adverse impact. And we are agile to take that. I think over the last 6 months, we have learned a lot how to deal with this pandemic, and we continue to basically be vigilant. Coming to your next question on the electronics part, Stanley has been, as I said, over the last 37 years, a very strong partner. We have expanded already our partnership to foray into not just lighting, but also electronic space. Lighting and electronics continue to actually merge, more and more. And hence, one of their product lines, which was the HVAC panel and also the electronic cable, we are basically have already made an agreement with Stanley. This includes basically backward integration for our current product line as well. We do see there is a good market opportunity over the next 3 to 5 years, especially given the thrust of government's Atmanirbhar Bharat as well as on localization. Currently also in various models, these HVAC panels are being used, however, not being localized. And hence, we feel that once this pandemic is over, we have stabilized the company, we will be putting in investments, not just in LED electronics, but also going forward in HVAC to ensure that we are able to give you localized product line. We have already started receiving RFQs, and once we materialize the orders, we will then make subsequent announcements accordingly.
Okay, but the timeline you said is in a year's time, or it's going to be longer?
No, it was FY22. We said that we should start somewhere the production in FY22 or later part of FY22.
Okay, good. Thanks.
Thank you.
Thank you. The next question is from the line of Bhargav Shah from CD Research. Please go ahead.
Hi, good morning. So, what sort of entry barriers are there in the LED business?
Well, I think there are high LED, let me put it this way first. There is in the component space itself, there are high entry barriers. And now when we look at product lines like the lighting systems. Globally, this is actually controlled by around about 4 or 5 players, all of which have got presence in India. And also in India, we have a very, very diverse and distinct supply chain, especially for lighting, catering to targeted OEMs. So I think the barrier entry is extremely high. That gives more complexities because lighting is a product which is actually fragile. It is bulky. It's not very easy to transport. And hence, depending on the customers, you have to set up a product line or the factories which are very close to it. And hence, it gives, again, barrier life. In terms of pure LED, the technology, which is not just in production, but mainly in packaging design, that is extremely, extremely relevant. And our global partners like Stanley have invested massive amounts in basically R&D to ensure that they are able to integrate LEDs into lighting systems. You're also aware that LEDs is probably one of the fastest moving technology. Every 2 to 3 years, it keeps on evolving in terms of product performance, in terms of quality performance, of lumen output, as well as on the price efficiency. So it's a very, very rapidly evolving market, and you need to be really having a good R&D. So in a simple way, high barrier to entry.
All right. So since you mentioned that, sir, then shouldn't we be having a positive market share outlook for LED going the years ahead?
We continue to do so. You're absolutely right.
All right. And since you mentioned a bit about supply chain, sir, so why are the replacement market revenues low for the company? Isn't that a market that needs to be explored?
Well, Lumax Industries does not directly deal with the replacement market. We are primarily dealing with the OEMs and the spares of OEMs.
All right. So is there some sort of contractual reasons why you all don't explore that market?
Well, we being focused on the OEMs, and there are certain contractual obligations, we would continue to focus into basically servicing our customer requirements in OEM and spares. There is another group company which basically does into the direct retail business.
All right. And sir, if you could put a figure on that, as in what sort of revenues would be coming from there, 15, 20%, anything, if you can give some sort of outlook.
On what? Sorry, I'm not following your question.
So my question is, sir, that if you could give some sort of revenue share that the other company is getting from the replacement market.
I think we'll restrict this question to the other whenever we are doing the investor call in the other company. That would be more appropriate.
All right. Thank you so much, sir. That's all from my side.
Thank you. The next question is from the line of Ashwin Shetty from Marcellus Investment Managers. Please go ahead.
Yeah. Good morning, gents. Thanks for taking my question. So I just had one question. When I look at your trade payables, so it used to be around 536 crores at FY18 end. It has been consistently coming down. So I think as it's September 2020 end, it has almost halved at 285 crores. So I wanted to understand what is the reason for this significant reduction in the trade payable, which also is having a bearing on our overall working capital. Thanks.
Thanks. Maybe I request Sanjay Mehta and Vineet to take this call.
Yeah. So the main reason of the decrease in the creditor is, if you see the Q1, which was there is no sales etc., and we continue to pay to the creditor, and we have a larger credit terms. So till it comes to the 30th September, a lot of credit has been paid off. And further, because of the increase in the demand suddenly, we on the demand of creditors, we keep on paying to them. That is the reason of the decrease in the creditors.
And in order to supplement that, this is Ankit Thakral. In financial year 18, there was almost around 100 crore amount that was bill discounting amount that has now been regrouped into long-term borrowing. Short-term borrowing.
Okay, but how should we see the number going forward? Should we continue to see decline in the creditor days, or will it stabilize at this level?
No, it will stabilize way forward once the production is in the normal phase. Because at the time it is on the increased trend, and because the creditors are also, because of the market conditions, to pay slightly fast. But way forward it will be stabilized almost around 90 to 100 days of the creditors.
Okay. And sir, second is just a bookkeeping question. If you can let me know the gross debt figure, including the current maturities, what it stood at September end.
It is around 350, September, it is 352 crores total debt. Out of that, long-term debt is almost around 41 crores, and others is the short-term working capital limits almost to 88 or to 90 crores.
Okay. Thanks a lot.
Thank you. The next question is from the line of Abhishek Jain from Dollar Capital. Please go ahead.
Thanks for taking my question. Sir, as you mentioned that one-time price reduction has taken in SL Lumax. So please throw some more light on it. Is it applicable with the other OEMs as well?
Sorry, can you repeat your question, Abhishek?
Sir, as you mentioned that there was a one-time price reduction you taken in SL Lumax. So please throw some more light on it. Is it applicable with the other OEMs? Because there's a lot of the cost pressure now with the OEMs, and they are trying to reduce their prices or cost.
Okay, I understand. So I think, SL Lumax, I've been mentioning in previous calls as well. I mean, because of their special arrangement with Hyundai globally, they keep on basically adjusting prices based on their global discussions when it comes down as one-time price times, and it's not a planned thing. For majority of the other OEMs, what Lumax Industries look at, we basically continue to be actively engaged in basically price negotiations and discussions, and they could be downward as well as upward because depending on the external situations. We keep on putting claims on a customer. It's a continuous effort. So in other customers, we don't usually expect ad hoc one-time, price decreases. And we keep on basically having it across the quarters which come. So that's how we basically are doing. A lot of them, the price revisions do happen in the quarter one, starting the financial year. However, depending then on the negotiations, we basically continue to do it, and then if it's a up, plus or minus, we basically then put it across throughout the year in the subsequent quarters.
Okay, sir. So during this quarter, revenue from the Tata Motors has gone up significantly. Is it because of the sharp volume uptake of Tata Motors, or you have won new business?
Yeah, so if you see Tata Motors, in the Q2 specifically, I mean, the growth would have been around about 10% or so. There has been basically, and we have basically year on year, we got about 22%. And it's primarily because in the increased volumes of Tiago, Tigor, as well as Altroz, where Lumax Industries have that.
Okay. Sir, my last question related with this government announcement of the production link incentives. So how this will benefit auto angst industry and Lumax industry particular?
So I think number one, I think the PLI scheme has been in many times deliberation with the industry and the government. Extremely happy to note that they have made the announcement, and even if you see the outlay of what the government has announced in the 10 sectors, almost 40% of it is actually going into the auto and the auto ancillaries, right? And of course, we are in detailed deliberations now, getting the final contours with the DHI, Department of Heavy Industries. I actually myself is leading this discussions. I think the sentiment is to make more localization, so it will be PLI towards that, towards export benefits, export competitiveness. And the idea was to balance, there are certain, I would say, disabilities when you're making certain production, but to ensure that we get the right PLI for the right, I would say, measures to make our industry competitive. That, I think, has been balancing it out so that we are able to be more, export-oriented as well as Atmanirbhar or localized. Now, the company per se, as I mentioned, that we have many product categories. In electronics, we are investing in localization. So the PLI scheme will definitely benefit us in terms of investment velocity, capacity, as well as in the localization initiative. And of course, make ourselves more competitive so that we are able to then discuss with our partner Stanley to meet also their global requirements where they can see India as a potential export hub in the future.
Oh, okay, sir. My last question is related with the system inventory. So what is the current system inventory with you? Is it normal or it's higher than the
No, it is
normal?
slightly higher, but looking to the increase in production, because of the increase in production also, we are keeping the inventory slightly higher so that there should not be any interruption in that.
Yeah. Also, Mr. Mehta, let me just come in. I think also there is a customer requirement given the festive demand pull and also the uncertainty in the environment. Most of the customers have also told us, and we are also planning to basically keep some high inventory level for basically the immediate next 2 months, 3 months, but this will normalize in the due course.
That's all from my side.
Thank you. The next question is from the line of Sanjay Shah from KSA Securities. Please go ahead.
Morning, gentlemen. Deepakji, you sounded a very nice saying that you are now focusing on having an entry into commercial vehicle and farm equipment. So can you highlight on that and can you talk some detail? What's the market opportunity? Who are the competitors? What sort of domestic manufacturing is there? How much is import content is there? What is the value of LED into this commercial vehicle?
Good morning, Sanjay bhai. Hope you are doing all well and keeping good.
Yeah, thank you.
So let me just give you a little bit more outlook on the industry, on the CV as well as FES, and then I will tell Vineet to get you a little bit more details on Lumax Industries per se. What we have seen primarily that the LED technology and also lighting has a very clear visible advantage while designing a vehicle. This was only being adopted in the two-wheelers and the fast cars. But I would say over the last 3 to 4 years, the commercial vehicles also, specifically when companies like the Bharat Benz basically came into being, they started basically adopting their global platform. And then, of course, Tata also refurbished their complete commercial vehicle chain and made it more modular. And in doing so, they also then discussed and decided to basically refresh it. And then the whole competition like Ashok Leyland, like others, followed about it. Also, CVs were breaked into the heavy commercial, medium commercial, light commercial vehicles. And as the light commercial vehicles volume grew up, they actually started adopting this. It was a very pleasant surprise that some of the tractor segment players also, especially when going into a higher horsepower tractor and also export-oriented tractors, and I'm talking specifically companies like TAFE, companies like Sonalika, they actually wanted to refurbish the tractor line, and while discussing with us, they decided that they will go the LED way. Of course, now Mahindra has also followed suit, Mahindra being the world's largest tractor maker by volume. That also showed that. So the trend is definitely shifting to having more stylish commercial vehicles or tractors, and their lighting plays a significant role of having a visible impact. And second, of course, because of the design change, they are now looking and open to adopting LEDs as well. We at Lumax over the last 3 years, what I had done was we had made a special department for our designing and styling, which was focused on the farm equipment section as well as on the commercial vehicle segment. This did give us impetus to basically do a lot of designing in that. Relatively speaking, if I say, our market share on lighting was almost negligible, a single-digit figure in the FES space. And the reason was we forego a lot of this lighting because there were conventional old types of sheet metal and glass still being used. And because of that, we were not making competitive in that market, and there were many, many players which were feeding this market. So we decided to actually focus on the high value-added lamps. Same thing also in the CV space, like the 1210s used to have that. But over the last 4 years, we saw that shift and we started doing the designing. And now we at least are targeting to have at least around about 25% of basically this market, especially in the farm equipment and also in the commercial to about 30-35%, given the fact that most of them will be new refresh lighting. On specific customers, Vineet, if you would like to add something.
Yeah, thank you. Sanjay ji, good morning.
Good morning, Vineet ji.
Hi ji. So I just want to add, I think most of it has been explained by Deepak ji, but I want to add that we were actually the leaders to lead this change in the agri, that is the tractor market. And we were the first one in competition to form a group and to engage with customer to change this technology in agri, that is tractors. And now we have started getting, after 2 to 3 years of hard work, started getting good response from almost all the tractor makers. And we are very confident to reach around 30-35% of market share quickly. And going forward, we see ourselves as a preferred player for this change. On the commercial vehicle, yes, there is a huge opportunity for a similar change. We are working on that, and that also will follow. In fact, tractor has been faster to change as compared to commercial, maybe because of cost sensitivities. But we feel that that is also a good opportunity for which we are equipped today to bring that change and capitalize on that opportunity.
That's great. Vineet, but what's the value of that LED, the whole set, vis-a-vis the two passenger vehicle?
See, I'll tell you, give you a ballpark number. In a passenger vehicle, if you are using all LED lamps, let's say, right? So the value comes to around 13 to 14,000 per car. Of course, it varies from feature to feature. In tractor, it would come to around 3 to 4,000 if it is all LED.
In commercial vehicle?
In commercial vehicles, it will also be around the same. It's around 3,000. Because tractors would have more lamps, just to let you know. They have these fender lamps which are 4 in numbers. Right?
Mm-hmm.
So that also, when they turn into LED, so the numbers go higher.
Yes, sir. Thanks for explanation and wish you happy Diwali to all, sir.
Thank you, Ji. Thank you.
Thank you. The next question is from the line of Anubhav Rawat from Monarch Network Capital. Please go ahead.
Yeah, hi, good morning, sir. Just a few questions from my side. So, sir, this price reduction in SL Lumax, sir, is it primarily in the Kia portfolio or Hyundai or both?
It is primarily on Hyundai.
Hello?
Primarily on Hyundai.
Okay. So, sir, any percentage, any ballpark percentage for this reduction?
I think usually they do around about 3 to 4%. That's what basically the ballpark figure is. But again, as I said, they are mainly done based on their global complete Hyundai order, so not specifically just for Hyundai.
Okay.
Yeah.
Right, sir. And sir, like for us, the split between LED and conventional is 65-35. Would you have any number for SL Lumax?
We can get back to you on this.
Okay, fine, thank you. And according to your annual report for FY20, I was just going through your contingent liabilities. So they have gone up from 62 crores to 92 crores. So, sir, what's the reason and what's your view on this?
Request finance team to basically take that first.
Shruti, it is
Hello?
Hello. It is on account of some GST liability on the molds, etc., where there is a litigation for all the component industry, and we are confident it will be in our favor way forward.
Okay. Because, sir, it's quite a big number. Like, I think it's 20% of our net worth. So, Are you fully confident that it will be in our favor?
Yeah, we are fully confident. It is not along with that, some income tax liability is also there, which is in the process of settlement. I mean, in our favor.
Okay. And sir, for this Bawal capex, how much is remaining?
Yeah, you are talking about Bawal.
Yeah.
Around 17 crore.
17, right?
Yeah.
Okay. So, and by what time will this be completed, sir?
So it will be, I think, completed by Q4 of this year.
End of this
Q4 or Q1 of next year.
Okay, fine. Thank you, sir. All the best.
Yeah.
Thank you. We would request participants to please use handset mode while asking your question. And we would also request you to limit your question to 2 at a time. Thank you. The next question is from the line of Pankaj Babade from Axis Securities. Please go ahead.
Thanks a lot for taking my question, sir. You mentioned about HVAC panels and electronic cables, which would be our next, which would be our foray in future. So this HVAC cable, is it something related to air conditioning, or where does this panel go in a vehicle? And what is the market, what is scope for us, and the total market available, and who are the competitors, both for HVAC and electronic cables?
So let me just tell you what the product description is. The HVAC cable panels primarily are panels which are controlling. So when you sit in the vehicle and where the audio system is, you actually see the full panel which controls. It's like a digital panel with basically like a LCD screen behind, and that primarily does the controls of the air conditioning or climate control. So that is what is the HVAC panel. We are not getting into any HVAC systems. These are basically on the control system for this. And in terms of basically sorry, was there a question there?
No. There was some disturbance.
Okay, sorry. So that was basically it. In terms of the electronic cabling, I mean, there are cables which also complement the vehicle integration with the panels as well as on the lighting systems. So that is what it is. Vineet, you can now come in and you can just talk a little bit on the market scenario per se.
Okay, so this HVAC is basically heating, ventilation, and air conditioning. That is what Deepak ji has just explained, where you see the cable.
The person you are speaking with has put your call on hold. Please.
Sorry, there was some disturbance in the call. You may go ahead now.
Yeah, so as I said, HVAC is basically heating, ventilation, and air conditioning. So these are the electronic panels that we do, which controls the air conditioning system in the car. There are existing Japanese and non-Japanese competition into this business. We are starting with one customer to start with. At this moment, it is preliminary not to speak about that customer at this moment because of competition. And gradually, after we start this production, we will penetrate into the market. So there is a business plan to it, and we can take it offline for details.
Sure. Can you give a color on what would be the total market for this product?
So the
just
total
ballpark figure.
Yeah, ballpark figure of this market comes to around 800 crores potential.
Both independently 800 या फिर दोनों मिला के?
दोनों कौन सा?
HVAC panel and electronic cable?
No, I am talking of total. Yeah, total market. It's around 800 crores.
Okay. Thank you. Thanks a lot.
Thank you. The next question is from the line of Viraj Kacharia from Securities Investment Managers. Please go ahead.
Yeah, thanks for the opportunity. I just had 3 specific questions. First is, on aftermarket piece, so whatever sales Lumax Auto Technology makes is made through Lumax Lumax Industry. Am I right in thinking that way? So the aftermarket network and distribution will be managed by them, but the supplies are primarily from us.
Slight correction there. Lumax Auto Technologies does buy a lot of lighting from Lumax Industries, but not 100% of the requirement. They also buy a lot of lighting from tier 2 suppliers, which are directly controlled by Lumax Auto Technologies.
So of the total aftermarket requirement of theirs, how much will be catered by Lumax Industries?
Out of total aftermarket of lighting needs of Lumax Auto Technologies, roughly about 70% of that lighting would be from Lumax Industries.
And for LED, it will be close to 100%. Am I right thinking that way?
Yes, possibly.
Okay. Second question is on the the HVAC panels and electronic cables which you talked about. So the market is primarily catered to by imports currently, right?
That's correct.
And what will be the cost differential? I mean, just based on initial working, say in terms of localization versus imports?
Well, I think in terms of, if you saw, we actually did certain insourcing and based on that and localization, we actually did improve about 100 bits. So, I mean, say it's a competitive scenario. If you look, so pricing difference, I mean, say you have to see, we have to talk about it a little differently where we export it out. But usually, depending on the logistics, the thing, a ballpark figure, I can say comes somewhere between 10 to 17% becomes a cost merit. Unless we get that kind of a cost merit, we're not able to localize it.
Okay. And last question is, so primarily our focus so far has been on the domestic piece. Now, given the PLI scheme and, also there's an increased focus on localization and also from an export point of view. So is there any thought process between us and our partner, Stanley, in terms of using India as a base also for automotive lightings or any of the other product lines which you talked about?
So is
there a roadmap to it, or is there any thought process which we are in discussion right now?
As I mentioned before in my call, I think there was when I was answering the PLI scheme, of course, I mean, Stanley has multiple global facilities, and I think India being one of them. And of course, I mean, we keep on discussing and deliberating that depending on the competitiveness of India, we can probably support certain regions and their global requirements. I personally feel that PLI scheme, once it is out with the exact contours and what kind of export PLI we can actually get, we definitely would be able to become much more competitive in the global requirement. And we are already in discussion with Stanley to look at opportunities to use India as the export hub.
Okay, last clarification. So for export will largely be a function in terms of us, if at all, requiring to Stanley's requirement, or us independently, do we have any thought process of us looking to catering to any of the markets, on independent basis?
See, there are two things here on exports. Number one, if I look at it, we already do independent exports specifically to Europe on certain platforms. However, I mean, whenever we export, we are very conscious of the fact that we are not competing with Stanley globally. Number two, now we are in discussions with Stanley to see whether, I mean, India can prove its competitiveness to get certain products which we are already probably making to meet the global requirements of Stanley. And in third, I think if you look at it, export also, why it comes low in lighting is primarily the reason that it is a very fragile product. It is also a very aesthetic product, so, dust-proof, scratch-proof, and it's not so logistically friendly. But wherever we see opportunities, and India does have a high logistics cost, and that's why I said that there are certain disabilities which are in India. Hopefully this PLI scheme, when it comes and puts out the details, would actually be able to offset those disabilities and make us more competitive for the global market.
Okay. Thank you for answering. I'll come back in the queue. Thank you.
Thank you. The next question is from the line of Avinash Nahata from ABC. Please go ahead.
Yeah, 1 second. Am I audible now?
Yes, go ahead, please.
Yeah, so thanks for the opportunity. 3 questions, all on SL Lumax. So number one is, SL Lumax, does it cater to the domestic markets for Hyundai and Kia only, or does it export as well? What is the mandate with that particular company? That's number one. Number two, since we hold a strategic 22-23% holding, so we would obviously, what we have heard from you guys is that there is a one-time price adjustment from the one-time price adjustment, and so there is a negative movement as far as profit from associates. If you look at half one this year versus last year, 7 crores positive versus 7 crores negative. So we want to understand as a shareholder is what to expect from this equity stake in the medium term. And third, is there any shareholder agreement which gives us, there is a clause which gives us an ability to increase our holding going forward? So these are three questions relating to SL Lumax. Thank you.
So number one, the SL Lumax is focused on basically the Korean manufacturers in India. They were since inception the sole basically lighting as well as other product makers like mirrors and trims for Hyundai in India. As recent Kia Motors basically entry came in, SL globally also got the Kia business. So in that way, its relationship with Lumax is extremely fruitful because we are able to have a structured way and give solutions to our customers where they basically deal with the Koreans, given their basically relationship for these Korean makers globally as well as headquartered in Korea. And Lumax, through its partnership with Stanley, basically caters to all other customers. Stanley and SL also cooperate globally and have basically a relationship in a global competition manner. Second part is, and you said that for, I think, the market, I think they will cater to the Indian market, not directly to export, but of course, I mean, say, Hyundai as well as Kia has exports plans, so they will basically go from the India sourcing plans. That's number one. Number two, of course, we have a minority shareholding in that within the group. This is the only entity which we have a minority shareholding, and this is a strategic interest which we have. Agreement is very clear to basically structure the market so that we are able to give better solutions to our customer, do not compete with each other, as well as more importantly, with this basically equity, we do enjoy rich dividends as well, which is coming, and this equity over a long period of time has also enhanced and increased in value. Number three, going forward, if we have a plan to increase and enhance our equity, as of now, we do not have any plans. We will basically sustain this equity model.
Oh, does the shareholder agreement provide you a provision wherein you can increase after X years? Is there something like this?
It's a confidential thing. I wouldn't be able to disclose that, but we do have a joint venture agreement between SL as well as Lumax Industries.
Okay. Thanks. And my last question was, there's a negative movement, 7 crores profit versus 7 crores loss this year, profit from associates. So we want to understand how is this business doing and what should we expect in the medium term from this business, SL Lumax.
So this is Anmol Jain. I think the business fundamentals are very strong of SL Lumax. It still enjoys a single source status across Hyundai and Kia platforms. I would only request, as mentioned before, please look at SL Lumax as an associate for the entire year, 12 months, and you will see that for the entire year, they do add significant value, both as Deepak mentioned in terms of dividends and in terms of the profits. They do have some very different understanding of a quarter-on-quarter arrangement with the customers, and hence you see these one-time abnormalities in specific quarters, both on the positive side as well as negative side. But I would only request you to look at the entire year rather than any specific quarter for these movements.
So, if my understanding is correct, you're trying to say that if you look at the previous 2 years and the way the SL Lumax profit from associates line item has been doing, So the profitability, obviously based on future growth, will be on similar lines, irrespective of quarterly movements.
That is correct. And you have to discount for this year specifically the COVID movement.
Yeah, that is okay. I'm talking about from a steady state perspective, annualized would be pretty much the same, and plus the growth in the business.
Correct. I mean, the growth would depend directly with respect to Hyundai and Kia plans in terms of the revenues, but I think in terms of margins, one should expect these current margins on an annualized basis to be sustained going forward.
Okay. Helpful. Thank you so much.
Thank you.
Thank you. The next question is from the line of Hasmukh Gala from Finvest Advisors. Please go ahead.
Yeah, hi, Deepak. Congratulations. I think in this set, I think you have really come back quite well in first quarter. Just wanted to know, what is your view for the full year? Do you think we will end up in black, or still there can be loss because H1 had a big loss component?
Well, good morning, Hasmukhji. Thank you for this.
Good morning, sir. Yes.
Well, let me put it this way that, the definition of black has changed. So let me put it in a way that at least in revenue, I think it will be difficult to be positive. It will be negative itself. But definitely all our endeavors are that we will, hopefully with this revenue strong outlook of H2 coming in, which was also we felt in the month of September, I personally feel that we would be able to turn the company around, and we would be basically able to report a black figure on the bottom line.
So just to supplement that, I think in H2, in H2, we do expect a strong volume recovery, a revenue growth. I will not surprise if for H2 standalone, we even look at a double-digit growth compared to H2 last year. But as Deepak had mentioned, for the full year, we definitely would be still in the negative territory in terms of the revenue. And in terms of the bottom line, we do expect that for the full year, in H2, we will have a much stronger recovery. And for the full year, we should be able to report profits for the full year for the FY21.
Okay. And that will be, I hope, it will be before this SL Lumax, because SL Lumax, we do not know what could happen.
Right now, I'm talking about without SL Lumax, with the...
Correct. And sir, what will be our effective tax rate, sir? Because it is 45% in quarter 2.
It is a normal tax rate, sir, around 34%, what is there.
That will be there in the year end.
Yes, the 45 is because of that deferred tax assessed liability. Okay.
We have not followed these new tax rates?
No, we have not followed.
Not yet.
Because we are having a MAT our account.
Okay. We have got the MAT credit to be aware.
Yes.
And sir, just last question from my side. You said that now we are focusing on the tractors and farm equipment and CV, etc. Do you see that in the passenger vehicles and two-wheelers, the new players which have come in last 4 or 5 years, are they making inroads into our territory?
No, so I think it's very clear that if we enjoy a 50% market share, I mean, we will need to basically put in all fires to basically sustain this market share. And I think if we want to gain the market share, the only way to gain the market share is to also enhance our presence in these segments. So when I said that we'll be focusing in the commercial vehicle and FES and gaining market share there, doesn't mean that we are planning to lose the market share on the fast car as well as the two-wheeler segment. We rather would like to integrate. Just to give you another thing we had mentioned about last year, that we have already started making inroads in the TVS motors, so for the two-wheeler. Hero, HMSI, Bajaj, we continue as a group to have a good market share leadership, but then TVS, we want to enhance basically our market share position. In the fast car business, we have already got MG Motors as a new client. We have also got some other key customers which are coming in, also entering. So we keep on basically putting our focus down and ensure that the major players like Maruti Suzuki, like for Tata Motors in the fast car segment, we've actually gained market share. So I think this happens, but of course their model mix keeps on changing quarter on quarter. It happens that we may have 1% plus minus, but in the long term, we want to basically sustain market share leadership across segments and also penetrate in niche.
Okay. And sir, what is the view of these major OEMs like Maruti, etc., on their future capex plan, capacity expansion plans? When do you think they will fructify?
Yeah, I think it's a very good and important question. COVID times for the industry itself was so unprecedented that it kind of has frozen on terms of at least capacity expansion. However, if I look at standalone October, you've seen like Maruti Suzuki did almost 180,000 plus vehicles. And also if I see the run at rate in Jan, Feb, March, which is Q4, Maruti wants to do something similar what they did in the month of October and November. December being already always a year-end month, the year-end month, they already have planned shutdowns and all. So hence, I think the pickup again will start Jan, Feb, March. And with this, the capacities expansion will be needed to be planned out. I personally feel that Maruti is already on the drawing board to see where they can do capex planning. Maybe they will announce soon in probably Q4 or Q1 of next year.
Okay, fine. Thank you very much, sir. Wish you all the best.
Thank you.
Thank you, ladies and gentlemen. Due to time constraints, that was the last question. I now hand the conference over to Mr. Deepak Jain for closing comments.
Well, I would like to thank everyone for joining this call, and I hope we have been able to respond to your queries adequately. I take this opportunity to wish all our shareholders a very happy, safe, and more importantly, also a prosperous, happy Deepavali. For any further questions, please request to get in touch with SGA, our Investor Relationship Advisor. Thank you once again for joining the call. Stay healthy.